As traders, we are constantly focused on maximizing return and limiting downside. One of the most important concepts that you need to understand, it's very simple, and it's called risk versus reward. In this video, we will discuss strategies used not only by traders like me, but investors as well. When you look at a ratio, it's risk versus reward. Now let's talk about what we're looking for and what that ratio means. So what is risk to reward? It's pretty simple. How much capital are we actually risking? What is the downside look like compared to what the upside reward is? That's risk to reward. So for example, if you're making a trade and you have a 7-to-1 risk to reward ratio, what you're actually looking to do is risk $1 of net losses for a potential $7 gain. That's a crazy risk to reward, but one that I'd love to have. At the same time, a more reasonable risk to reward, 1 to 3, where you risk 1 to reward yourself 3. So maybe you're giving up a dime, but expecting to make 30 cents. That's risk to reward 1 to 3. Pretty important. That's a great risk to reward. If you can put on a trade that has a 1 to 3 risk to reward ratio, that's banging. That's what you're looking for. But that's kind of hard to do. So you got to search for these, use technical analysis and charts to look for these plays. Now, the important thing to understand is when you're taking a risk to reward trade, you got to make sure, hey, we don't want the risk to take in place, but if it does, make sure you have a stop order so that you're stopped out for that dollar, because the minute you add a little bit of slippage, the next thing you know, your ratio could be all messed up, and next thing you know, you're 2 to 3, maybe you're 1 to 1, something like that, and that's not going to work out in the long term. All right, so what is a stop loss? If you were long something at $51, let's just say you bought a stock at $51 and your risk to reward is going to be 1 to 3 and you're talking dollar units, well then your stop order would be placed at $49.99 or a break of that $50, giving you that $1 loss. Remember, there'll be slippage, so it'll probably be like 1.2, something like that. Give yourselves 20 cents worth of stop risk there. And on the upside, if it goes to $53, then you're only 2 to 1. Remember, you're long at 51, so you need that thing to go to 54. I like to put an out at that level as well, capturing your win on the upside and your out on the downside. All right, you could also measure your risk to reward in percentages, right? So if your tolerance is going to be 20% downside, then you just simply put a stop 20% lower. But then you got to have, if you're going 3 to 1, then you got to have 60% stop on the upside as well to make sure you cover your order. So make sure you have both in there. But if you're going to use percentages, hey, keep the same ratio and choose whatever percent you want. All right, when scanning for trades, let's just say you don't have a ratio, but there's an area where you want to get out. Scan your trades, look at your charts. If there's a support area that it's been holding and that's your out, then that's your out. Get into the position and respect that support level, and then do the ratios from there. If you're a swing trader and you don't really care about the intraday moves, you're just looking for highs and lows, closes on the day, hey, you can use high-low daily charts as well to find your outs and your ins. But be careful, because that is going to create slippage. You never know the price you're going to get. What if you hold something into earnings and the moves happen? That's a big risk when you're talking about risk versus reward ratios using daily candles. All these rewards that we're talking about, it's going to be based on your investing and trading style. For me, 1 to 1, 2 to 1 is perfect. I get in and out as much as I possibly can, but you have to determine what your tolerance is. How much capital are you putting into this? You might have a different risk to reward based on the asset class and the type of investment that you're in. All right, I hope you enjoyed this video on risk versus reward. It's something that I use every single day. And if you want to see me put it into practice, join us daily at TraderTV.Live on YouTube. It's 8:30 every single day, and visit our more TraderTV.Live page on YouTube to get more of these videos as they're released.